Ending a really weird and harsh week and another down day today. Very unusual price action all week long. Very hard week. Minus $4,200 today. Hits at a minus $26,000 drawdown. And we had our equity peak last Friday, had a 20K day, and then minus $26,000 this week. So from last Friday to today, we have a minus $6,000 result, and month to date minus 12,390. Quarter to date, we're still up on the quarter since April the 1st and up on the year, but just a very frustrating trading day. Also have technical errors in the platform with crashes and sticky data on fast price movement, and so working to resolve that. Let's go over the market and the trades on the day. I want to show you where the drawdown is, though. In the closed trade, we have the closed trade drawdown in the multi-charts platform. As you can see here for this portfolio, you can see just a rapid, sharp drawdown. And you've seen that historically you can see those rapid, sharp drawdowns. So it's not unusual to have a rapid, sharp drawdown. This is a pretty skinny, rapid, sharp drawdown. Just really just one of those weeks where it just was grinding against your trades all week long, and it just it starts to get to you after a while, especially if you're watching it all day. And you can see that the drawdowns that come into this area really quickly. This is the closed trade drawdown. There's multiple types of drawdowns. There's an intraday drawdown or tick by tick drawdown. And so, for example, if you start the day with a $250,000 account and all of a sudden maybe you have a $25,000 run up, and then you have a boom, you end the day up and you're only up 1K, so your account balance is $251,000. You're at an equity peak. So if you started trading at 250, you have a 1K equity peak, but you're at a $24,000 intraday drawdown. Now say you started closing those trades out at the plus 20K level. So your closed trade drawdown is 19K. 19K closed trade drawdown, 24K peak intraday drawdown tick by tick, and a plus 1K equity peak on a closed trade basis. Now you could also have month and quarterly drawdowns, but we're just focused on end of day drawdowns. Intraday and closed trade, and this shows you the closed trade drawdown where those closed trades happen, and that's where we are on an end of day basis. It is at a worst case drawdown. Let's take a look at the portfolio calculator. Updated this as of yesterday. I don't have the results from today. The market just closed, and we were at minus 22,195 yesterday. 4K. At about 4K, at 26,195, and that is back to 2014. And you can see that some of our new strategies, opening chop, has not done us any favors. We added a bunch of opening chops. It worked at first, and then lately that strategy has not done well at all. And so the opening chop trade just disappeared on us. It trends at the open now all of a sudden after chopping at the opening. For about a year. It chopped at the open for about a year. We added some opening chop strategies, and now that trade just disappears on us. The market changes quickly and seems to morph around what we're doing. So let's look at the trades on the day. I want to show you something else that I saw in the market, and this is buying the open. If you just buy the open and exit at the close, you buy the open, exit at the close. The last 4 years, no slippage or commission. This is what this looks like. And this is just simply represent a pattern. $50,000 run up in about 100 trades, and so this is the fastest this has gone up. You see about a $50,000 run up here in about 200 trades. And during the pandemic, you saw some of this, but not nearly to the same extent. Even during that fast run up we had after all the money printing, you saw a fast run up, but since January 1, there's just this constant, let's drive the Nasdaq higher at the open, and it's gone up quicker than it has in the last 4 years from a dollar perspective. And so it either goes up at the open or it gets propped up in the afternoon or reverses in the afternoon. And so this unnatural prop up continues to happen. And just a narrow range, very narrow range market. What we want to do is we want to risk the gains on the quarter, plus 5,000. And you see here this drawdown, intraday close trade drawdown, right at these levels. Risk about 5K, no more than 5K. We stop and readjust if we hit worse than 5K. Drawdowns going forward. Let's look at the trades on the day. Another way you could maybe think about this is just to stop trading. This latest TradeStation platform has been a real issue as well. Let's look at the daily charts. I want to show you this real quick, and then we'll look at the trades on the day. There were some good trades, some tough trades. This narrow range, this unreasonable range, narrow VIX, as we come into, we're coming into a time period here where you get the selling man go away, you get the debt ceiling, got a lot of uncertainties in the market, and the market's just trading sideways. The Nasdaq is slightly higher, but sideways, very narrow range. This is where March 31st closed. Let's look at the week. Let's look at what happened on the week. Very sloppy price action. Here is last Friday's close right here, and just some of the sloppiest weekly price action we've seen. Last week was sloppy too, except for Friday. Friday was a good day to recover, but this week we just had sloppy price action all week, Monday through Friday. Very harsh trading. The VIX is just really narrow right here, and they're trying to create a time correction. There's still too much liquidity in the market, in my opinion. And my perspective, the mode of this market is really make on the Nasdaq is make a new high by 10 points and then pull back 50, and then make a new high by 10 points and then pull back 50, make a new high by 10 points and pull back 50. So it's going up and then acts like it's going down, but then it reverses on you. And so very difficult price action to trade. And when you experience price action like this, that's not normal, that you don't see on a regular basis, and all of a sudden it becomes a regular price action for a week or two or a month, but it's not regular longer term. It's difficult to know what to do in those situations. But one thing we consider doing is risking another 5K in this portfolio, or 2% on the 250K portfolio, and then potentially just waiting for this market to break out of this range. You hate to stop right here while you're waiting for the market to bounce. It did take out the worst case drawdown on the end of day basis, but not on a closed trade basis. It's right there. You want to give it room to bounce after this fast drawdown and after an unreasonable week, just extremely unreasonable price action all week long. And then we can also look at the S&P here. So if we look at the S&P, just here is, where is March the 31st? March the 31st is right there. And so March the 31st is right here. And then just we have a month and a half of just a very narrow range, very sideways price action. My perspective is the market should go down, the market should be lower, but in the short term it continues to be propped up and trending higher. So I always anticipate higher prices in the short term, with the idea that the market can roll over and crash at any point, like it should. That's why we take the long and the short trades. That's why we have day trade algorithms that take long and short trades. And so let's look at the trades on the day. There were some good trades, some tough trades. The adaptive moving average, you just see this reversal all the way back to the middle of the day, all the way back to its VWAP. Now, tick count trend dynamic turnaround had a great day. Got short here, got short there, got long there. Really nice trades on that strategy. That was a highlight. Momentum reversal was also a highlight. So those are two highlights. Got short and then got long. The Nasdaq version didn't trade though, so that would have helped us out had the Nasdaq version taken these trades. Opening chop just worked against us. This, like I said, this strategy was a good strategy for a long time. We started trading it. It was working for us, and then lately it just just kind of died out on us. The opening chop just disappeared not long after we started trading it. So we have to maybe consider removing these strategies, opening chop 2, and tick chop. And so we highlight the momentum reversal and tick count trend dynamic turnaround. Cobra 3 lost on the day, one of those short trades. Adaptive moving average got long, got short, down on the day. Nasdaq strategies, Cobra 3 got short, stopped out. EVP1 got long at the end of the day and reversed. This is one of those trades where we were long, we reversed to short, we finally caught up on the day, then the market reversed again, then we got net long here at the end of the day, and then it rolled over again on the Nasdaq. So very discouraging price action. This strategy was around break even on the day. We had the short trade going, reversed to the long, but it's nice to have a reversal sooner. And then tick reversal, got short here. This is an impossible to short market right now, which makes no sense. There have been strong bull markets that are easier to have short trades than the one we're experiencing right now, which is determined to fight shorts and make it difficult to short the market. Robot down on the day. Tick count trend came close to, well, this one didn't. Zig Zag came close to its profit target on the short side down here. It actually did hit its profit target. Zig Zag was kind of a highlight on the day. Took long trade, short trade, long trade, and then so momentum reversal would have been nice to have those same trades as the S&P, and those are the trades on the day. Once again, what I recommend for Monday is to hold for the bounce. Pull this workspace in here. Hold for the bounce. Risk the profits on the quarter, and try to capture that turnaround if we get it. If not, if we don't, we'll pull back, we'll pause, work on a reduced set of strategies, or waiting until the market breaks out of this range. It's just reversing frequently in a narrow range and very hard to trade. So it's been this way for a while. We're due for a breakout. Not sure if we'll get it, but those are the trades on the day for Friday, May the 12th, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.